of business.
Importance of ethics and corporate brand.
Roles and responsibilities of Chartered Secretary.
And for all that you need to know about the principles and practices of corporate governance.
Join the conversation at Corporate Governance Platform.
Showing on MITV UHF 43 and channel 255 on DSTV. On Thursdays from 4:30 p.m. to 5 p.m.
Corporate Governance Platform, proudly brought to you by the Institute of Chartered Secretaries and Administrators of Nigeria.
ICSAN, the hub of governance professionals.
You must have the fear of God, because the fear of God is the beginning of wisdom.
For the effectiveness of Board of Directors.
Sustainability of business.
Importance of ethics and corporate brand.
Roles and responsibilities of Chartered Secretary.
And for all that you need to know about the principles and practices of corporate governance.
Join the conversation at Corporate Governance Platform.
Showing on MITV UHF 43 and channel 255 on DSTV. On Thursdays from 4:30 p.m. to 5 p.m.
Corporate Governance Platform, proudly brought to you by the Institute of Chartered Secretaries and Administrators of Nigeria.
ICSAN, the hub of governance professionals.
Hello and thanks for joining Corporate Governance Platform. Corporate Governance Platform is proudly brought to you by the Institute of Chartered Secretaries and Administrators of Nigeria, ICSAN, the hub of governance professionals. And we are transmitting live from MITV Lagos. I am Dr. Tunde Odeyemi, your regular host. Our risk management expert, Gary Cohn, once said, irrespective of the business that you are doing, if you do not invest in risk management, it is a risky business. And on that basis, we are going to be discussing risk management, which is highly pivotal to corporate governance. And the topic of our discussion this evening is risk management as a top responsibility of the board. And to lead in this conversation is a very distinguished associate member of the Institute of Chartered Secretaries and Administrators of Nigeria, ICSAN, and a corporate governance and risk management specialist, Dr. BAMIDELE OSENI. Dr. OSENI is the managing partner, Caleb Consulting, Uganda Limited, a firm of risk assurance, financial services, strategy and corporate finance, governance professional, and human resources outsourcing consultancy services. He has over 27 years experience in banking, fintech, auditing, and consulting services, with the last 15 years as executive management staff, group bank representative at subsidiary banking board of directors, and non-executive director of NGO. He is a Pan-African and seasoned risk management professional, and he has provided risk leadership for several banks in the East, West, and Southern Africa to design and implement a robust enterprise risk management framework and culture that has supported these banks' business growth within their risk appetite thresholds. He has understanding of banking market and regulatory framework in over 24 African countries in the Eastern, Western, Northern, and Southern Africa. Is a certified risk manager by KPMG Sweden, certified management consultants, fellows of several local and international professional bodies such as ICANN, National Institute of Credit Administration of Nigeria, NICA, Institute of Management Consultants of Nigeria, Associate of Chartered Institute of Taxation, and of course, Institute of Chartered Secretary and Administrators of Nigeria, ICSAN. Dr. OSENI holds bachelor's degree from Obafemi Awolowo University in Agric, Masters of Arts degree in Economics from Kampala International University, Uganda, and 2 honorary doctorate degrees. He is an international trainer and a speaker on many international conferences. Dr. BAMIDELE OSENI. It's a pleasure to have you on Corporate Governance Platform.
Thank you once again, Dr. Deyemi. It's been a nice time here.
Thank you. Risk management is something that we cannot joke with. Especially, it's one of the strong pillars of corporate governance.
Correct.
And I want to believe that our viewers will have one or two things to take away from this evening's conversation. And to be part of our conversation, you only need to send a text message to ask a question or to make comment. Send your text message to 080-2323-1287. I take the number again. Only text message to 080-2323-1287. You have the number on your TV screen. So, Dr. OSENI.
Yes.
Let me start by saying that what exactly or how exactly can we define risk management?
Risk management, as I said earlier, we distinguish, there are two things. There's a risk management, there's enterprise management.
Okay.
Risk management is an integral part of the process of management to identify, assess, mitigate, measure, mitigate, and control potential events that affect institution objectives. Now, the objective of risk management is to ensure, it's a process, it's a way of life to the organization form to ensure whatever they are doing in their business, they look for those activities, those processes, those events that can impact negatively on the achievement of the objective organization. Now, when we look at enterprise risk management, that's what is looking at, okay, it's also a process, but this time around, it's looking at it from the perspective of process put in by the board of directors. Remember, risk management is put in by the management.
Okay.
Risk management is a process in place by the management to identify, assess, measure, control, and report risk. Enterprise-wide risk management is a process instituted by entity board of directors, top management, and all other personnel applied to strategic setting of the organization with objective to identify potential events that can affect the entity objective and provide a reasonable assurance that this potential event are managed in line with the appetite, the risk appetite of the institution. You remember we didn't talk about risk appetite in the risk management process. Because why? It's a process to just identify, assess, because it's what management used to implement risk management. Now, the word enterprise is the strategic document put in place from the risk management perspective by the board of directors to say, this is our risk appetite as a board. This is the business we want you to do management. This is how we want you to run. These are the limits we are putting in place for you. Now, management goes about doing that based on what the board has given them.
Okay, I want to get a clearer picture here. You have told us risk management falls under the purview of the management. Enterprise risk management falls under the purview of the directors.
Yes.
Now, when we talk about governance, which organ of governance has the top responsibility to manage risk?
Board of directors.
Is the board of directors. Okay.
The board of directors put in place a framework.
Okay.
Now, enterprise management is a framework in place by the board of directors. Now, they are the ones that come out with their appetite. This is amount that we want to take to do this business. They are the ones that say this is our tolerance level. This is the maximum loss we want to record doing this business. Now, the management are the ones that implement.
Okay.
They implement what the board has said. So, and that is why board of director, based on our Nigerian corporate governance, talk about the board risk management committee.
Okay.
We are saddled with that responsibility. They are part of the board. Board is the entire board of directors.
Okay, we know it's the entire board of directors. Now, according to statute, existing laws,
Yes.
and let's look at the National Code of Corporate, Nigerian Code of Corporate Governance of 2018. Now, which committees of the board has the delegated responsibility to manage risk?
Board risk committee.
So in every board of directors, there must be board risk committees.
Correct. In some, when depending on the size of the institution, sometimes it can be combined with board audit and risk committee, and that's why you look at the Code of Corporate Governance, section 11, section 11 subchapter 5, verse 5 says that in the event whereby audit is separate, board committee is separate, board committee is separate, there are some members, they must have uniform members. That is why you see a standard best practice. Every board audit committee standing on its own, board risk committee, they have common directors.
Okay.
Because why? They intertwine. So the board audit risk committee is saddled with that responsibility. But when the company is small, they can combine board audit and risk committee
together. But it's different functions.
Yes.
Entirely.
Yes.
When you were talking about the risk management earlier, you said it's about risk identification,
yes,
risk assessment,
yes,
risk measurement and control.
Yes.
Can you explain risk identification and risk assessment?
Now, when you're into any activity,
okay,
there are events that can impact negatively and positively on the institution. One of those events is they can be foreseen and unforeseen. COVID-19 was not foreseen. They can be known, they can be unknown. Now, when you begin to look at sources of activities in your institution, sources of activity, processes, services that can bring uncertainty to your business. Look at, for instance, let's look at here right now in this TV station. One of the unforeseen activities, tomorrow now, the regulatory authority for broadcasting can come up with a new rule. Those are the risks that we're talking about. And it's operational in nature. And it's compliance. They can say this is what we are changing. The new regulation might affect the profit line, bottom line, might affect the way they do businesses. That's what we're talking about. So when you begin to look at events in your organization, activities in your organization that can affect, that can bring uncertainty into your work, then you identify. Now, the aspect of assessment, you now ask yourself, okay, what is the likelihood that the broadcasting regulatory authority can come out with a new regulation now? Likely, unlikely, very likely, very unlikely. Now, if it's likely, what is going to be the impact? That's where the issue is. So if the impact is such that it's going to affect, it's going to increase the costs of doing this business, then that's what we're talking about. You're not assessing now. Assessing is that time you begin to look at what is the likelihood of this event happening, what is the frequency. You know, COVID-19 has never happened in 100 years. Just one. And see how many businesses, how many lives that have died by that uncertain event. And that's what we are talking about. So when we begin to assess the likelihood, the frequency, the impact, then that's the assessment. And that leads us to another sentence. Okay, once we have assessed the impact, because it is not all risk that you identify that are impactful. You know, that's what I call high impact events and low frequency.
Okay.
High impact events, low frequency, because they rarely occur like COVID-19. But when they occur, they bring a disaster. There are other ones that high frequency, low impact. High frequency, low impact. So that's when you are doing that, you are doing assessment.
Okay. You have talked about how to identify risk.
Yes.
And you have also mentioned assessment of risk.
Yes.
And while doing this, you mentioned particularly operational risk.
Correct.
I know there are legal risk.
Yes.
Reputational risk.
Yes.
And some other risk.
Yes.
Now, can you explain some of these risks that are known and how do they really affect or impact organizations negatively?
Now look at operational risk, for instance. Is that potential event that can lead to a loss as a result of inadequate, failed internal process, people, system, and external event. And I go very quickly. If somebody in an organization, an employee organization, make a wrong pricing, make a wrong quotation, The goods is supposed to be, the price was supposed to be 3 million, and she put 100,000, and the client paid 100,000 instead of 1 million. That's an operational risk that has crystallized from an employee. Now, when the company started to go back and say, it was a mistake, it become illegal. The man said, no, the agreement that has. So that's what legalism. Legalism is that there is a potential event that your contract, your agreement can be wrongly come up with. It can be wrong agreement. The contract can be repudiated. It can be refused. It can be rejected. There can be omission and submit that will lead to a loss. Like this case now, somebody has prepared just in the contract document, instead of 1 million, put 100,000, and everybody did not see it.
Wonderful. Can you give us some corporate failures, examples of some corporate failures that are attributable to lack of proper risk management?
I'm sure many of us know this who are listening to me. There's what they call barring banks in UK. And I quickly can look into what you say. Barring banks in UK. There's a barring Singapore, is an investment outfit. There was a young man that was sent from UK to barring Singapore. This man was an operation man. He was to go and be an MD. That's what they call risk. He got there, he was messing up. He incurred so many losses, and the bank did not collapse because the bank did not do very well. The bank collapsed because the Singapore subsidiary made 829 million pounds losses that wiped out the capital of the entire bank.
Was that lack of risk management?
Yeah. Because the man was trading without authority. As I said, risk management is so broad. This is a people issue thing. The man was assigned to be an MD of an investment outfit. He was just ordinary operational man in a bank. You can't just jump to become, the investment banking is a specialized area. Trading in stocks, and if the guy messed up the thing, he overtraded, he did the loss because it was not supervised. And at the end of the day, the loss he made was enough to crash the entire bank. In East Africa, we have a bank called Imperial Bank. It based on operational risk and credit risk. The bank made about $23 million that wiped out their capital. They were closed in Kenya, in Uganda, and in Tanzania.
But they made capital. They made money. Is that not what you're talking about?
But the money was wiped out by losses.
Wonderful.
So the problem of risk is that if you don't manage your risk very well, whatever income you are making, you wipe it by losses. I give you very quickly an example of a bank. A bank is doing very well, gave a loan out, he charged an interest of 25%, and did not manage the loan. And you made several profit. 3 months down the line, the loan went bad. All the income has been wiped out, and you are negative, and it eats the capital, and that's what happened.
Okay, when you were talking about board committees the other time, you said if it's a small organization, probably the audit committee and the risk management committee can be combined together. Now, what role do internal and external audit functions play in risk management?
Internal audit is the third line of defense. In risk management, we have what we call first line of defense, the risk owners, the risk takers. That's the first line. Marketers, traders. The second line of defense are the risk management team, internal
second line of defense.
Second line of defense.
Okay.
They call risk management team, finance. The third line is internal audit and board of directors. The internal auditor is to provide an assurance that the risk management is properly managed in line with the risk appetite of the institution. The external auditors are to provide the independent opinion, external, that is being properly managed very well. Quickly, when Aaron collapsed, Otto Anderson was indicted. They closed down. When Satya Computers in India closed, PwC was indicted. When Lehman Brothers collapsed in US, Ernst & Young was indicted. Because why? All these audit firms, all these things involve managing information, financial information. The risk will always crystallize into numbers. And the numbers will affect your capital. And we close the bank.
Okay. Thank you very much, Dr. OSENI. If you are just joining us, we are discussing risk management as a top responsibility of the board. And Dr. OSENI has been doing justice to that. If you want to be part of the show, you can either ask questions or make comments. Send your comments or questions to 23231287. 230023231287. That is the phone number to send your question or comment to. Now, you have made us to understand that we have first line of defense, second line of defense, then we have the external auditors.
And the third line, which are the third line.
Which are the third line. Now, what role can information technology, it's information, IT is everything now. What role can information technology play in risk management?
If you look at code number, Nigerian Code of Government, section 11.5, one of the roles of the body's committee is to provide guidance on data governance. Information technology is all about information asset, information data of the institution. So one of the things that risk management committee does, the board, is to ensure that they provide a guidance and expert advice for this management on data governance, on information technology and IT risk. Now, IT is supposed to risk management to automate the process. That's what we call risk automation. Risk automation expects us that things you should do manually should be automated so that risk management team can be able to do their own assessment, identification in an automated digital way. And that's basically what it is.
Okay, still on the Nigerian Code of Corporate Governance, yes. The code provides that in the risk management committee of the board,
yes,
it should comprise of the executive directors, non-executive directors, and we should have more of the non-executive directors.
Yes.
So what is the rationale for this?
Section 6 of the Nigerian Code of Corporate Governance says non-executive directors are supposed to provide experts, independent judgment, and experience. So non-executive directors are supposed to bring into the board their own knowledge, their own expertise in the business, in the risk management, in the operation of the bank. So they are not part of the management. So it's going to provide an independent opinion, because management, because they have a stake, can be sometimes subjective. And that is why, for me, non-executive directors are supposed to be in the risk management, because risk management is an independent function. So you need independent mind to look at it from independent perspective. You want management to be there so that they can be able to respond to the issue that they raise. For instance, the code of conduct is still very simple. It's still very, let me not say simple, more not too stringent, because the standard practice is that whoever shares the risk committee should be an independent non-executive director.
Okay.
Independent. Independent means that he doesn't have up to 0.01% capital. He's not an employee for the last 5 years. He's not a relative. So he bring us an objectivity so that he can provide assurance to the stakeholders and trust and confidence.
Okay, I have a question from one Mr. Bamidele. His name is Bamidele Adeogun here.
Yes.
He said, "You are doing very well, sir, but can risk management forestall corruption in corporate organization?"
Now, let me tell you very clearly. Risk management is not to stop risk. It's to manage risk. It's not to eliminate, it's to manage. Manage within your appetites. So, what risk management can do to concerning corruption is to reduce the level of corruption. It cannot wipe it out. So, we need to understand that.
So, Mr. Bamidele, you need to understand that risk management cannot wipe it off completely, but it can minimize corruption. Now, look at this question. In what ways do you think whistleblowing policy of an organization can facilitate sound risk management?
If you have, before I came from Uganda, there was some people make a complaint that a particular receptionist is giving a problem about visa approval. Now, I don't work there. Now, if they pass that information, they whistleblow to the officers of the embassy. Okay. Now, 3 people gave a concern, and that is not just unethical, it's illegal. Now, that alone will help the embassy to manage the activity and process very well. So, whistleblowing, according to Section 90, is actually help risk management to identify illegal activity, as activity that are not properly, that are not complying, and escalating. Now, I don't want to mention nations. There are nations that they pay, and they pay their staff, the staff of an organization, to disclose unethical practice without telling their organization, and they will pay them some percentage
for whistleblowing.
For whistleblowing. For instance, if somebody in an organization says our company is not paying tax very well, and the government is able to raise 50 million from that tax, they will give him 5 million and 2.5 million.
Wonderful. Now, do you think ICSAN training for chartered secretaries can equip one to have a sound knowledge of risk management?
Yes, and I also want to tell you to the same. You see, risk management is an ongoing process. It's a marathon journey. It's not a sprint. So therefore, what the Institute have started was a welcome thing. Integrating risk management knowledge training into all facets of the learning. The fast track we had it. Then I think I'm sure they also have started something for the student. So the process they've started is now this is another opportunity. So, but what I would say is that for every chartered secretary, what you do with risk management and how you go for risk management is your own decision. How much training you are equipping yourself, what knowledge are you, it's not, don't just to become very static or just doing things as normal. You need to, so risk management is a journey. Some of us have been trying to risk management for over 15 years. We didn't just start speaking like this. And I think that's my advice to my fellow starter secretary. But Institute has started on a very good note. And I think we should just increase it more.
Okay. When you started, you made us understand what is enterprise risk management.
Yes.
So what is the relevance of enterprise risk management in risk management strategy?
If you have enterprise management, you're able to identify opportunities.
Okay.
Your risk assessment will tell you there's an opportunity here. I keep on telling people, risk has two phases. There's uncertainty positive, there's uncertainty negative. The uncertainty positive is what they call opportunities. The uncertainty negative is what they call loss. So therefore, if an organization put in a strong enterprise management framework for, number one is that you're able to see your opportunities. Number two is that you have entity risk. You know, remember when we're talking about entity risk, enterprise. You're able to get entity risk. You know your risk, the entire enterprise risk. That's number two. Number three is that there will be no surprises. You can plan your strategy. Effect no surprises. You are able to know your risk. You are able to know the losses and manage everything appropriately. You integrate it. So risk management, enterprise management also help you to be able to be a specialist in your area. You know where your strength is. By reason of income that is coming, you can focus more on it and grow it and expand it. So you reduce losses. You minimize losses. You plan very well in your strategy. And at the same time, there are no surprises. And you can know what are things that can affect your business and manage it appropriately.
What is your advice to corporate entities out there on the issue of risk management?
The board should take a leading role, a tone from the top. A tone from the top. Let the board of directors be seen taking the lead and driving enterprise management. Number one. Number two, the board of directors and senior management should walk the talk, not just talking. Not just walk the talk. Walk the talk of risk management. Number three, it should be a lifestyle. It's not just a compliance tool. Number four, it should be a business tool. DFI, Development Financial Institution, IFC, they want to see an organization that has a risk management tool. It's become a business tool for you, not a compliance tool, not a regulatory tool. For me, I think that is the way. If the board is able to walk the talk, if you're able to lead, set the signal, we are very interested. I cannot mention institutions that they made loss in 2017, and because of that, a global bank, and because of that, they have to close down operation in Africa.
Wonderful.
So therefore, organizations that want to go for risk management, let's be a tone from the top. Risk managers are not your enemies; they are your friends.
Okay.
They don't kill business; they want to add opportunity to you.
Okay, thank you very much, Dr. BAMIDELE OSENI, for sharing your thoughts on the subject of risk management. I believe our viewers have one or two things to take away. I'm taking this one away. As a board, you need to walk the talk when it concerns risk management. Thank you very much.
Thank you, sir.
And for our audience, our viewers, we would like to thank you for being part of today's show. Our production team also want to thank you for doing a very wonderful job. Before I wrap up, I would like to take this announcement from our sponsor, ICSAN. The 47th annual conference of the Institute of Chartered Secretaries and Administrators of Nigeria is going to come up on 21st and 22nd of September, 21st and 22nd of September 2023. And the theme of the conference is Sound Governance as a cursor to a thriving economy, a case of inclusiveness. So to know more about the conference, please visit ICSAN website. Thank you very much once again, Mr. Bamidele. I would like to invite you to join us again, same time, same station, for another interesting and educative episode on corporate governance. Finally, before I wrap up, take this quote. The first step in the risk management process is to acknowledge the reality of risk. Denial is a common tactic that substitutes deliberate ignorance for thoughtful planning. This is a quote from Charles Tremper, a risk management specialist. I remain Dr. Tunde Odeyemi. Bye for now.
For the effectiveness of Board of Directors,
sustainability of business,
importance of ethics and corporate brand,
roles and responsibilities of Chartered Secretary,
and for all that you need to know about the principles and practices of corporate governance.
Join the conversation at Corporate Governance Platform.
Showing on MITV UHF 43 and channel 255 on DSTV on Thursdays from 4:30 p.m. to 5 p.m.
Corporate Governance Platform, proudly brought to you by the Institute of Chartered Secretaries and Administrators of Nigeria.
ICSAN, the hub of governance professionals.